Hey, what is going on, guys? My name is Nick, and in today's video, I'm going to be sharing my top 6 Metaverse stock picks to buy early before the hype train rolls in. Or has it already? Anyways, this all recently came about after Facebook CEO Mark Zuckerberg recently announced that they'll be changing their company name to Meta to reflect the company's new focus surrounding the Metaverse. Now, if you aren't already aware, the Metaverse is essentially the future version of the internet where it's going to be fully immersive VR and AR and without limitations. For example, if you wanted to play chess with your friend across the world, or visit a concert from your living room, or go to outer space, it would all be possible via the Metaverse. But it's not just Meta that's going to be working on the Metaverse. It will require the input and expertise of many different companies to meet all of its demands, which is exactly why I've made this video for you guys today. Now, I want to preface this video by saying that most of these stocks are not cheap or undervalued by any means, except for maybe the first one. What you need to understand is that fast-growing industries attract a lot of attention, and thus the company's stock prices get hyped up, just like we've seen with Tesla's stock price over the past 2 years with the EV boom. However, it doesn't mean that you can't make money in these stocks. It just means that you're going to be paying for growth several years down the road, and the valuations will be high and could come down within the near term. So anyways, if you do enjoy the video, make sure to destroy that like button, guys. It really does help support my channel, and I really do appreciate it. And it turns out that most of my viewers actually aren't subscribed to the channel, so if you haven't already, definitely consider subscribing so you don't miss any future investing content coming from my channel very soon. But with that said, let's get into these 6 Metaverse growth stocks to buy early. All right, now the first stock on the list here today is the company that is obviously going to be the head of the Metaverse, and that is Meta, with ticker symbol FB right now, but then they will be changing their ticker symbol to MVRS on December 1st. Meta is the new parent company of Facebook, Instagram, WhatsApp, and Messenger, all of which I've discussed in depth on my channel because Meta is a huge investment of mine. However, Mark Zuckerberg has a new focus for the company outside of these existing social platforms, and that would be the Metaverse. Now let's get into why Meta is an amazing play to take advantage of the expansion of the inevitable Metaverse. First of all, in Meta's recent Q3 earnings conference call, Mark Zuckerberg started talking about the Metaverse, and one of the main goals that he has is to bring the Metaverse to over 1 billion people within this decade, and then to achieve hundreds of billions of dollars of digital commerce within the decade. However, he followed up by saying that it's going to be a very long road ahead to be able to build out the platform and all of the VR, AR technologies that accompany it. To give you some context, Meta had just over 60,000 employees in early 2021, so this is a considerable amount of their workforce that will be focusing on the Metaverse. Also, Mark Zuckerberg said that the company is going to have reduced operating profits of $10 billion in 2022 due to the substantial investment into the Metaverse. And he said that this will continue for several years onwards as they continue to build out the Metaverse. Alright, so now let's quickly investigate Meta's financials after their recent Q3 earnings report. Here we can see Meta's total revenue grew 35% year over year to $29 billion, while their EPS grew 19% year over year to $3.22 per share. And as we can see, they've been consistently growing their revenue and gross income over the past 5 years without a gap, while their EPS has also been growing, but at a more staggered pace. But the part we should care about most right now is their balance sheet, because the Metaverse is going to require a huge amount of investment from Meta. Right now on their balance sheet, Meta has $58.3 billion in cash and cash equivalents, while they have $17.8 billion in current liabilities, which gives them a cash ratio above 3 and is great to see. Now, I want to take this opportunity to quickly share the platform that I'm using to do today's research, and that is Inverse. Inverse is a free stock research platform which is also aiming to be the future social media of finance. Essentially, they make it incredibly simple to perform a comprehensive analysis on a company without needing to go anywhere else to find information. Then once you're done, you can share your analysis in the main news feed just like you would on Facebook, allowing you to connect with other investors and see what others have published. Personally, I find Inverse incredibly easy to use, and everything is super user-friendly, so if you're wanting to sign up to the waitlist for the beta that's coming out soon, click the link in the description or in the pinned comment below and you'll get access. Finally, Inverse also gives us a simple overview of Meta's current valuation, which is sitting at a PE ratio of 23.4 right now, which is incredibly cheap for its growth and future potential. Overall, I'm incredibly bullish on Meta, and I will continue buying this stock as long as I can get it at a very discounted valuation, just like it is today. Alright, but now getting into the second Metaverse stock to buy, that would be Autodesk with ticker symbol ADSK. Autodesk is the leader in 2D and 3D design software, which is most famously known for its program called AutoCAD, used by engineers and designers. However, Autodesk has certainly diversified its portfolio beyond AutoCAD ever since going public back in 1988, where it now licenses over 100 unique design software packages. Needless to say, Autodesk stock has reflected the massive software as a service boom, with their stock price up nearly 350% over the past 5 years, and it's been a 40-bagger since their IPO. Now, their business model focuses on 3 key areas. Firstly, architecture, engineering, and construction. Secondly, product design and manufacturing. And thirdly, media and entertainment. This third segment involving media and entertainment is the reason why Autodesk stock is a great stock to own for the upcoming metaverse. As the hardware technology advances, as in VR headsets and AR glasses, there's probably going to be a huge software boom to be able to build out the metaverse. And that's where Autodesk is going to benefit substantially from the growth. Right now, we can see that Autodesk offers a media and entertainment collection software selling for just over 3,000 Canadian per year, which is of course a subscription-based business model. Now, I absolutely love this about the business because it makes their business model very sticky, as the customers have to continue paying for the subscription service, and it also provides them a switching mode, because once you get to know that software, it becomes difficult to move to a different software. Like, people using AutoCAD now will not be moving to a different software anytime soon. And you might like to compare Autodesk to a company like Adobe or Microsoft, in which they offer those subscription-based services. All right, moving along, let's look at the company financials. Firstly, as we can see from this chart, Autodesk has been growing its revenue quite consistently over the past several years, from $2 billion in 2017 to $3.8 billion in fiscal year 2021. And on the earnings front, we can see that they went from negative $582 million in 2017 to positive $1.2 billion in fiscal year of 2021, as their high-margin subscription revenue began turning them towards profitability. As for their balance sheet, Autodesk has $1.9 billion in cash and cash equivalents and $3.3 billion in current liabilities. Now, this represents a cash ratio of 57%, and I'll be honest, this isn't the best, but because Autodesk has so much recurring revenue through their subscription-based business model, I'm not concerned about this. Now, looking at their latest Q2 earnings report, we can see that Autodesk increased revenues by 16% year over year and produced free cash flow of $186 million, which is excellent to see. Finally, jumping into their valuation, Autodesk isn't exactly a cheap stock, because you are paying for this software and subscription-based business model. Currently, Autodesk has a PE ratio of 55 and a forward PE of 46, but their PEG ratio is 1.7, which really isn't that bad when you consider the earnings growth for this company that they're expecting over the next 5 years. Overall, I'm incredibly bullish on Autodesk stock over the years to come, as they're the go-to software suite when it comes to engineering and design, but they're also going to be a huge player in the metaverse, with their media and entertainment packages gaining in popularity. All right, now the third metaverse stock to buy is a smaller company named Matterport, with ticker symbol MTTR. Now, Matterport was traditionally a company known for selling super expensive cameras used for real estate photography and 3D renderings to be able to walk through a space online rather than having to go to it in person. And that 3D camera that they offer is called Pro 2, which is the gold standard for professional 3D capture, and you can tell how great it is when you see the physical renderings after an area has been scanned, where anyone can virtually walk through the space like you'd see in the metaverse. Now, don't get me wrong, this is a huge area for growth, but Matterport has since expanded their product offerings significantly. The company is now making big strides towards the eventual creation of the metaverse through Matterport for Android, making 3D capture freely available to more than 1 billion Android mobile devices. Additionally, Matterport just announced a new partnership with Meta AI Research, which is the Facebook AI research group, and this is for advancing research and development of AI systems for the physical and virtual world, which has been adopted by over 180 academic institutions to date. Clearly, this company is going to be a huge player in the AR and VR space, as they're already partnering with Meta AI Research to be able to build out the metaverse. So now let's take a look at the company financials to try and better understand what this business is about. Firstly, it's important to note that we don't have too much information on the company, since they recently went public back in February of 2021, so take this earnings report with a grain of salt. Anyways, Matterport announced their Q3 2021 earnings on November 3rd, in which they saw total subscribers grow to 439,000, which was up 116% year over year. Then total revenue grew 10% year over year to $27.7 million, while their subscription revenue grew 36% year over year to $15.7 million. They also stated that they now have annual recurring revenue of $62.7 million. However, this company is still unprofitable, having posted a GAAP loss of 86 cents per share or a non-GAAP loss of 6 cents per share. But now let's take a look at their balance sheet to see if they have sufficient liquidity to be able to wait out the eventual build out of the metaverse. So currently they have $149 million in cash and cash equivalents on the balance sheet, while they have total current liabilities of $25 million, giving them a cash ratio of 6, which is great to see. However, since they had a net loss of $177 million in Q3, mainly due to the change in fair value of outstanding warrants, they will still have to continue raising capital over time, I would imagine, whether that be through issuing debt or shares. And finally, based on Matterport's annualized revenue run rate of $111 million per year, the company is trading at a staggering price to sales ratio of 50 right now, which is not cheap by any means. But again, getting in early could prove to be profitable if this company is still around and does continue to help build out the metaverse. They could be a huge player in it. Overall, this is a $5 billion subscription-based business that is still in the growth phase, so I can't be too hard on it that it isn't profitable yet. And again, I see massive potential for this company to help build out the metaverse with creators being able to use their tools and cameras and software, so I think this is great. All right, moving on to the fourth metaverse stock of the day, and that would be Unity Software with ticker symbol U. Unity is the world's leading platform for creating and operating interactive, real-time 3D content, having produced some popular games you might know like Angry Birds or Pokemon Go. And if you've ever played video games, there's a very good chance that you've played one that has been created using Unity's software. To give you an idea of the impact Unity has on the gaming industry, over half of the world's video games are created with Unity software tools, and 71% of the top 1,000 mobile games were created using Unity software. But the company also operates in several other segments than gaming, such as film, animation, cinematics, architecture, engineering, and construction, all of which would be very useful areas of development for the metaverse. And since going public back in September of 2020, the stock price is already performing incredibly well, being up over 150% so far. So let's peek into Unity's Q3 2021 earnings report to see how well they're doing so far. Firstly, the company made a surprise announcement that they're going to be acquiring Weta Digital, where the company released the following statement. Ultimately, this acquisition is designed to put Weta's incredibly exclusive and sophisticated visual effects tools into the hands of millions of creators and artists around the world, and once integrated into the Unity platform, enable the next generation of RT3D creativity and shape the future of the metaverse. So this is excellent news that the company did this acquisition specifically to be able to build out the metaverse, so that is great to see. And now let's get into their Q3 financials. Unity reported 43% year-over-year revenue growth to $286.3 million, which exceeded guidance and analyst estimations. They also raised their full-year guidance on the strong results, which is why the stock popped so much after the earnings. Now, they did have a net loss of 41 cents per share, but this was a significant improvement from last year's net loss of 97 cents per share. Looking at their balance sheet, we can see they have $755 million in cash and cash equivalents, while their current liabilities are only $579 million, meaning they could pay off all of their debt and liabilities if they wanted to. However, the company is still unprofitable, so they might have to continue diluting shareholders and or raising capital via debt. So that is a consideration if you do plan on buying this stock. Moving to their valuation now, Unity is currently trading at a fully diluted 2021 price to sales ratio of 53, which again is quite expensive, just like Matterport. As you've probably noticed, the stocks in today's list are quite expensive compared to the normal stocks I would be talking about in my videos. But that's because the opportunity with the metaverse is so large, and as the company becomes profitable, the valuation is probably going to make a whole lot more sense. Anyways, Unity will definitely be a huge player in allowing creators to create these digital spaces within the metaverse, and so I'm very bullish on this stock over the next decade. All right, now the fifth metaverse stock to buy early is NVIDIA with ticker symbol NVDA. NVIDIA was a pioneer in building the graphics processing cards for computers, enabling people to game, perform video editing, and watch 3D content with ease. While most of their revenue still comes from the sale of these cards, the company has evolved its product offerings tremendously. NVIDIA now offers several hardware and software solutions when it comes to gaming and entertainment, laptops and workstations, cloud and data centers, application frameworks, and much more. And at the company's latest GTC conference, NVIDIA announced new technologies such as an AI-powered chauffeur that can actually park your car and a tool to predict the path of wildfires. So clearly, this is a company that is focusing heavily on AI. With NVIDIA's 83% share of the discrete GPU market, they will certainly be a huge player in being able to build out the metaverse. So now let's take a look at the company's financials. Starting with their earnings report on August 18th, NVIDIA reported revenue of $6.51 billion, up 68% year over year. Then they reported EPS of 94 cents per share, up 276% from a year ago, and up 24% quarter over quarter, which is honestly insane. And from this chart, we can see how steadily their revenue and gross profit has been growing over the past 5 years, disregarding 2020, of course, due to the pandemic. Now, looking at their balance sheet, we can see NVIDIA has $11.6 billion of cash and cash equivalents, while they only have $3.9 billion of current liabilities, which gives them a cash ratio of about 3, meaning that they're in a very strong financial position. Not to mention, the company is already profitable too, so they won't have any need to raise capital anytime in the near future. But now let's take a look at how their valuation is doing, because the stock price has just run like crazy over the past 5 years. Currently, NVIDIA has a trailing PE ratio of 106 and a forward PE of 64, which are high, but considering the insane EPS growth they've been experiencing as of late, and will continue seeing for many years, it makes total sense. Personally, I'll be waiting to see NVIDIA's earnings report coming out on November 17th before I actually buy into the stock, because the valuation has run up significantly and it could take a pullback after the earnings. But overall, NVIDIA is going to be an essential company for the upcoming metaverse, because users, creators, and companies are going to need this graphics performance for all of the computing and all of the graphics within the metaverse, so this is a great play. Now finally, for the sixth and last stock of the day to take advantage of the metaverse, this is actually an ETF, and that would be known as the Roundhill Ball Metaverse ETF with ticker symbol META. If you don't want to take the risk of picking an individual company to benefit from the growth of the metaverse, this ETF would be an excellent pick for you instead. The META ETF was recently launched at the end of June of 2021 and is the first ETF of its kind to track companies that are closely corresponding to the metaverse. And there are 7 key focus areas of this ETF in which the companies should be related to, namely computing, networking, virtual platforms, interchange standards, payments, content, and hardware. As for the companies within this ETF, you'll probably recognize a few within the top 10 list that I've already talked about today. Now, NVIDIA has the highest weight of nearly 10% in the ETF, followed by Roblox, Microsoft, Meta, Unity, Autodesk, Amazon, Tencent, C, and Taiwan Semiconductors. Obviously, there are so many companies that could be tied to the metaverse when you look past content creation, such as hardware or payments and e-commerce, which is why so many of the large tech companies are also included in this ETF. Now, getting into the performance, there isn't much of a history on Meta ETF, as it was recently launched in 2021, but it is up 5% year to date. And as for the management expense ratio, it is 0.75%, meaning that every year it's going to cost you 0.75% regardless of the performance just to hold this ETF. Now, it should be noted that this is quite a lot higher than the average Vanguard expense for an ETF, but if you want to take advantage of the metaverse, this is probably the best option for an ETF. And the growth of the metaverse should outpace the S&P 500 over time, so this probably makes a lot of sense to pay a little bit of a higher fee for a higher growth ETF. Overall, I think this ETF offers some great exposure to companies that are tied to the metaverse and should correspond very closely to its growth, so I would definitely consider holding this in my own portfolio. Anyways, to summarize the top 6 best metaverse stocks to buy early, those would be Meta, Autodesk, Matterport, Unity, NVIDIA, and Meta ETF. But anyways, I really hope you guys enjoyed this video, and if you did, don't forget to drop a like, as it did require a lot of research on my end, so I do appreciate that. And just comment down below and let me know if you do enjoy any of these stocks, hold any of them, or if you plan on buying any of them, or if there are any other stocks related to the metaverse that you think are going to do extremely well. I would love to hear it. But yeah, if you haven't already, make sure to subscribe to my channel so you don't miss any future investing content that I do upload. And with that said, I will see you guys in the next one.